Okay, weekly market update. I'm going to start with the big one, inflation. And inflation's been like that guest who overstays their welcome. We have seen it tick up, but the weird part is that rents, which make up a big chunk of those inflation numbers, they're actually declining. But it does take some time for that to show up in the numbers, and it's also a bit skewed because homeowners equivalent rent is based on homeowners basically guessing what they could rent their homes for. And now that shelter component of rents and rent equivalents makes up a third of the core CPI, so we should start seeing a downward trend there soon. But with inflation being stubborn, expectations for the Fed rate cut have been pushed further out. Despite consumer sentiment getting a bit of a boost from rising stock prices, the Fed's still playing hard to get and maintaining a more hawkish stance than we'd like. So they're waiting and watching, even based on their meeting minutes from January that gave us a peek into their thoughts from a few weeks back. The bond market itself has been on a bit of a roller coaster, especially with everybody adjusting those rate cut forecasts. So just when we thought a March cut might be in the cards, now we're hopefully eyeing June. And the Fed minutes didn't really bring any surprises, just sticking to that script that they're not in any hurry to slash rates. But on a brighter note, we got existing home sales, and that's showing some life, a sign that despite the challenges, there is still a healthy appetite for buying homes. The 20-year bond auction this week didn't do us any favors, and we are keeping an eye on how this plays out for interest rates. But we've got some big indicators on the horizon like housing data, GDP, and PCE, the Fed's favorite measure of inflation. So we'll get some clues on where things are headed. And the Fed speakers, they continue to say they know they need to make cuts, but they're just not rushing into it. Last week I mentioned the buy now, pay later trend might be a sign of the economy weakening. Today I found out that 21% of consumers are using it for grocery shopping. So just how strong can our economy be if we're financing groceries? There is optimism in the housing market, but with broader economic signals and the Fed being cautious with rate cuts, we'll just have to be patient. So talk to you next week. Have a great weekend.